Hey folks, welcome back. Today I'm going to be talking about how I made $12,000 in about, uh, well, I don't know what this is, maybe like 30 minutes, 1 hour. Yeah, so I made about $12,000, 10 or 12 within an hour. The way that I did this was I was looking at S&P 500, and I'm telling you this just for knowledge. I'm not telling you this as an endorsement or any kind of investment advice because I think that the movement is already past. But the reason that I wanted to share this is so that you have a better idea of what I do and how I do it, maybe give you some inspirations about some strategies that you might want to try yourself at your own risk. So anyway, the SPY, or in other words, S&P 500, has been consistently moving down for quite some time now, a couple of days. And what I noticed is I don't know if I can show you the candlesticks on here, but SP 500, let me see if Yahoo Finance has the candlesticks. That's one of the reasons why I like them. Yeah, so you can see there are these candlesticks here. And if we look at from a monthly basis, right here we're hitting all-time highs around August 13 to 15, and then we start going down. Now, one of the things that's very dumb but which can give you signal to momentum is looking at higher highs and higher lows. So look at where the high and low are here. Just look at the top and bottom of this line to compare to the next day, compare to the next day. And that can give you some idea of momentum. If you just literally take a pencil and trace out this bottom line, and then take a pencil and trace out this top line, now you have some idea of momentum. Now, when I looked at this here in the last couple of days, you take the top line, you trace this out, you take the bottom line, you trace that out, and you have a downwards momentum. So I predicted that in the next day or two, there might be some downward movement. And so I made a big bet on that. Now, the reason why this is a really high risk play and the reason why you need to be careful about things like this is because it can rapidly reverse. So as I've made, let's say, 12K today, I could have easily lost something like 20K today. And if we zoom out, we can see instances where stuff like this happened. So I bet against the market on August 1st, and I made approximately, if we look at this from 68 to about 128, so that's about 60K or so, like 59, 60. I made about 60K within a day. And if you look very carefully, I also lost it over the weekend. So this August 1st was Friday when there were some tariffs kicking in. And then by Monday, I had lost all my gains. And then it kept going down and kept going down until I cut my losses. Because here I was really surprised. I thought that tariffs would cause everything to drop again like it did during April. It did not, because the markets have actually decided that, oh, Trump is more of a showman. We know that stuff like this is potentially going to get pushed back, reversed, or a deal will be settled out relatively soon. That's what the market thinks. At least that's my interpretation. So then, I haven't really been doing that much, just making some small plays here and there, losing, gaining. And then all of a sudden you have this big spike again. That's the bet that I've been making here. What are some potential catalysts for this drop? Because we talk about momentum, but what actually causes that momentum to happen? Well, my hypothesis is that there are a couple of things upcoming. There's FOMC meeting minutes. So this is where the Fed has a member. Specifically here, we have Waller speaking about how the economy is doing and talk about, whether or not this or that is, I don't know. Generally speaking, they just talk about the economy. So the more important thing is Jackson Hole Symposium. So if you want to know what Jackson Hole Symposium is, it's basically when a whole bunch of people who are bankers get together and talk about things like policy, economics, and the significant economic issues of the time. So they will probably be talking a lot about the tariffs and how lowering or changing interest rates or keeping them the same will impact that. So this is really important because Fed Chair Powell is going to speak here, and Jerome Powell, being the head of the Fed, he has a lot of weight. So his opinions or whatever he says can significantly impact what people expect. Right now, if you've been following my previous videos, We know from a lot of betting networks and from a lot of different investment or finance groups that generally the expectations online are that the Fed will probably cut rates in September. There's about a 70% chance of that right now. How much they cut, that remains to be determined. Some folks are saying that it's probably going to be about 25%. 25 basis points. That's 0.25%. So it'll drop from 4.5% to 4.25% probably. Now, there's also potentially some low probability of 50% rate cut. And you can actually kind of see that here. Some people on Polymarket, you can look at economy and how much. So September, so there's right now approximately a 3% chance of a 50 basis point decrease, but most people expect it to have either a 25 basis point decrease or more likely at 28% chance there could be no change. Now, the reason why they argue there could be no change is because if you look at this past week, there's a lot of data from retailers. So retailer earnings calls. So like Target, Walmart, Home Depot, all of these companies are reporting on earnings this week. Now, if we want to care about what they're saying, then we can take that information and think, oh, this is how the consumer feels about the economy, because the consumer typically needs to buy stuff. And if they are pulling back, that can be a big indication that the economy is contracting. In other words, shrinking. Now, if they weren't, and if a lot of normal folks are still spending a lot of money, even though inflation is going up, that's a good sign, because that means that the economy is still resilient. So Home Depot reported earnings call slightly below, or was it Lowe's or one of those two? Anyway, so and then Target reported earnings right around earnings versus expectation. Let's see here. So it says here from CNBC, we have earnings per share of $2.05 versus $2.03 expected. So it was a little bit better, but Target is also, I won't say too much about them. Anyway, if we look at Walmart, and Walmart's earnings are coming out later today, I believe. Walmart earnings called date and time. They will be reporting, on Thursday, August 21st, 8 a.m. So tomorrow morning, we're going to hear more from Walmart about how things are going and what the average or potentially more lower income individual is either purchasing or not purchasing. That can potentially, again, add a lot of information to how the economy in general is doing, and then indicate, oh, there are potentially domino effects here, because once consumers stop purchasing, then businesses stop being able to make as much money. Advertisers are less incentivized to spend money because customers don't even have money to spend. And so you'll see a general shift. You can also kind of see that based on other stocks today. If you look at what stocks are going up, it's mostly staples. So this is Medtronics, CRM. I think this is Salesforce. Yeah, that's right. Then there's other ones like Kellogg or Kellanova, Water, CWT, PG, electricity. No, sorry, Procter & Gamble is consumer staples. Excuse me, I was probably thinking of PG&E. This is, I think, Berkshire Hathaway, Gold, Berkshire Hathaway, Bank of America. Oh, no, sorry, Boeing. Wow, I'm getting a lot of these wrong. I should probably get flashcards or something. If you really go through it, I do believe, I wish I had a heat map. Actually, let me see if there's heat map of industries up and down today. Percent change. Yeah. Sector performance. Yeah, here we go. So here's sector performance. All right, I'm going to try not to spend too much time here, but my gist is that I wanted to try and get you an understanding that there seems to be a market rotation across industries, and generally tech is taking a pummeling while other staples are being hedged in anticipation of the Fed's interactions with the public. So I hope that this was all informative. I hope that you learned something here. Don't try to copy my strategies. The momentum has already passed, in my opinion, because if you look at it, it seems like S&P 500 has already started to do a V shape again. And generally speaking, just try to be careful out there. But if you do want to follow the news and try to understand why the market's moving the way it is, maybe my opinions are helpful. Thanks a lot. Hope to catch you in the next one. See ya.